Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Progress is not possible without change, and PRMG is devoted to providing our wholesale partners across the nation with the best combination of products, pricing, technology, and service. Get approved with PRMG today.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network and brought to you by our friends at PRMG, who are always working for your best interest. So last week, interest rates moved all the way up to test on the 10-year Treasury exactly that ceiling we talked about, that important 2.635. Keep a watch on that this week. It's going to be really critical. It may coincide with a stock market rally that we break through this. If we do break above this level, you're more than likely going to see yields move up to about 3.04% on the 10-year. Now, what does that mean mortgage rate-wise? 3/8 to 0.5% increase in a very short period of time in mortgage rates, which is about 150 to 200 basis points loss in pricing. This is a time to be careful and protect yourself on these fronts. This is a really important level, so keep a very close watch on that. Now, hopefully it will hold. As we've mentioned to you in the past, this level has held over the past 4 years. It's held 4 important occasions, so it's been there for a while. Each time in the past, as we approach this level, it has backed down and we've seen lower yields. But it's going to coincide, I think, with the move in the stock market. If stocks continue their incredible rally and strength, you'll probably see yields break above this 2.635. And isn't it funny how we've seen yields rise? A lot of people are curious as to why. And as we've mentioned, and as we've warned, it's the Fed's curtailment of buying back those mortgage-backed securities. And this is so important because as the Fed in October began to buy $4 billion less of mortgage bonds, $6 billion less of treasuries, and then in January increased that curtailment to buying $8 billion less in mortgage bonds and $12 billion less in treasuries, we've seen interest rates get pressured higher, pricing get pressured lower. And remember, this is going to continue now. In fact, they're going to continue this into February and March. And in April, they ramp it up again. Another $4 billion and $6 billion respectively. It'll be ramped up again in July and finally ramped up again in October. So look, interest rates more than likely will be pressured higher eventually. So this is a very good time to be telling your customers that, hey, get out there and more than likely you'll have the benefit of purchasing a home before prices appreciate, which they will throughout the course of the year by about 4 or 5%, and grab a lower rate. So this is really a good time for people to be actively purchasing right now. All right, so what else can we expect this week? We're going to get a GDP. We're going to get existing home sales, new home sales this week, and the FHFA price index. So I assume that this data will be pretty darn strong. The media always have their negative spin on it, but you could follow up on all this stuff and share this information with your clients if you would like to sign up for MBS Highway. At least take us up on a free trial. Hope you guys have a great week ahead. Bye-bye.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.